The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this 14th, very important 14th day of June. Why? Because the Fed is going to make an announcement, although the charts seem to be telling us a tremendous amount. We might not need the Fed to decipher all this. We'll go through it as we go step by step. Thank you to our programming before, and I hope that I can keep that standard up. And let's see, we've got the Dow down 16 at 21,311. You got the S&P at 2436, down 4. The comp index is down. Is that an 8? Yep, 6214. VIX index is actually up 37 cents at 1079. Still in the 10s. Here's the E-mini down 375. Now, let me take just a moment to talk about this. I'll move it up. Here we go. Within the concept of the Chapman wave, the ideal is to be able to get to at least 4 peaks higher. At that point in the alphabetically notarized, going A, B, C, D, fourth highest peak at D, is where other things can happen. It can go higher, and very often it does. But D is your objective. However, when there is a failure, everything about it says that the only way you can count this is to go to a C, and then it pulls back, and struggling to get to the D. Sometimes I have something that I call, it's like a phantom peak. It's made up because it hasn't really got there. D fails because it goes to what I call a peak C1, in this case 2445.75. And in this is still the June. Let me see if I can go ESU 17. Okay, ESU 17 has this is the September contract, has us going to a high of 24, let me just get this right here, 2443.50 on the 9th, pulls back for 2 days. This is the third day after that, and it attempts to get to that high, but instead the high so far is 2443.25. 2443.25. Is that 25 cents? Yeah, 25 cents lower. Let me double check. Yep, 25 cents. So as far as I'm concerned, with the MACD turning down and stochastic now under 80%, the on-balance volume having plunged, all the little ducks are in order to say it doesn't have to go to a higher high. It can go to a leg D, but there's a chance that if the Fed comes out with whatever it comes out with today, and there is a pullback, immediate pullback, and this becomes a short-term top, everything's in place because I can use peak C1 and C2 as essentially a top. Great. Why did I want that? Because the S&P cash, SPX.X, the S&P cash had to go to 2446.20, and the high today so far is 2443, let's see, 75. So that is a little bit more. That's 2 points away, but you're talking about 2,400, 2,440. So in essence, it could be peak C1, C2. It's surprising how many times, even with the peak C1, C2, that eventually a D actually works out. So now let me tell you why I'm making a big deal about this, although it's not Technical Friday. I want to look at it technically. Got a lot of questions. I'll get to the questions, and let me explain. The Dow has gone to a leg F. It is in the resistance line that we're looking at, is in a Chapman Wave 5. The E-mini was also in a Chapman Wave 5. And that's suggesting that right here, we can start to anticipate very limited upside with a greater chance that there's going to be a pullback. At this point, I'm just saying a pullback. I'm not talking about a crash. I'm not talking about a 20% decline. I'm just saying there are signs that we could be looking at the potential for a pullback coming in really soon. Number 3, within the context of the MACD, which is still good, and the stochastic at 89%, still good. It is price. And I've always said that price determines trend. You can be looking at unbalanced volume, you can be looking at volume, you can be looking at volume average, you can be looking at Fibonacci, you can be looking at Chapman wave, you can look at anything you want. If the price is rising, it means that there's an uptrend in place. And if the price is declining, it's a downtrend. And at this point, even though we just squeaked to a new high in the Dow, everything is there to say a close below 21,220, 21,225 is the 9-period exponential moving average, in the next 2 days would suggest we're in for time, not yet price, in the consolidation. It'll turn into price if other factors come into effect. Okay. Why did I want to spend some time on that? Because a push into 24,430s says, hey, we've recycled, we're going higher, don't even think of going short yet. A pullback suggests that all the little ducks are in order. Now we're waiting for the MACD to cross negative and the stochastic to go under 80%, and it'll take at least 230 points, 270 points in the Dow to really get that kind of impetus to the downside. So it would be the start of a trend turn. Okay, and the reason why I'm making a big deal is the QQQ stopped right at the 9-period moving average after making a peak C, and this is so unusual to go to an all-time high. No other way I can count it. This is a peak C, and it's a peak C minus. It'll be a failure pattern. If the QQQ series, the NASDAQ Index 100, cannot, at 140.55 up 19 cents, cannot get to at least the 142.80s to get kind of close to the 143.90 level, so I can say, yep, now we've got at least a peak C1, peak C2. But wait a minute, the weekly chart is at leg F. And by Friday, I don't know if we'll make a new high. And that could become a peak F. And the MACD is good, but the stochastic is at 89%, but starting to turn down. The relative strength is the clue, that little red line there, that it's starting to decline. So this says to me, be real careful when you're coming to the three elves that were fantastic. That's the QQQ series, the XLK, which is the S&P Select Spider ETF. Let me just move this away for a moment. In leg C in the monthly, still very positive. However, the weekly is at a peak E if there's no new high this week. And that peak E at a peak, you got the daily D. You see, I need D. Look at that D, the sharp pullback we had. Remember that huge sell-off in the marketplace on the 17th of May, just a plunge to the downside, and then corrected. I think people are thinking we might be for the same thing here. I don't think so. I think this is going to be a failure pattern. In fact, I wanted to draw it here. I think that there's going to be an arch formation and sometime soon, and that we will retest some of the lows that were made recently. So that's the XLK, all right? Haven't got the signal in the weekly yet, but it's real close that there's a sell signal coming up very soon. So that's the QQQ, the XLK. Now we get to the SMHs. The SMHs can't break above the 9-period exponential moving average after plunging down, made a peak F, a Chapman wave 5, a G/C in the weekly chart, market vectors, semiconductor ETF at 85.61, just down 12 cents, has a leg C in the monthly. It's still very positive. I'm suspecting that we're in for a pullback, a rotational pullback. The Fed's going to give us some impetus to say what sectors will actually benefit a little bit. So, Basil Chapman, Tiger Technicians Hour, Dow's down 6, S&P's down 3.65, and we'll be back and we'll talk about the IWM, the Russell 2000, which is made a peak D, which is about some of those things, and of course bonds, gold.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So let's look at crude oil, because crude oil took a dive today. Remember yesterday we were talking about, actually I've been saying the way the 200-period moving average has just been repelling the price. It just looks to me like the question kept coming up. Many people kept asking me, could crude oil start to have a decent bounce here? And I said, yeah, it could. But I'm not, and we'll know today at 2 o'clock which sectors are being impacted. But look at this left side, right side price time match in the crude oil. Look at this. We had it once before. Look at it's a work of art. Let me tell you this. So people often say to me, these charts should go into the Museum of Modern Art, and I don't disagree. Of course, sometimes they're just as mysterious. Look at that left side, uppercase A. That was the price top. On the 12th of April, left side number of bars to the right side was exact as it broke down on the 4th of May and went to a lower low. And look at this. We've got a price time match to the high that was made right there on the 25th of May from the 5th of May low. And it goes peak A, B, C, D, another D. How many Ds can you get? Look at that. D, D, D. Bam. It comes down, trough A, trough B, trough C. Trough D had a tiny little bounce, and today it is coming down. It's going to miss by a day or two if it takes out the low that was made on the 5th of May at 44.10. Isn't that amazing? Look at that. Another A. I could just put this A right here. Same pattern, same plan, same everything. Amazing how that works. I've never really been able to. I figured it out in terms of, I was talking about it as human nature, going up and coming down shouldn't be different, except in those moments of panic, either upside panic or downside panic. But in terms of the number of bars, how it works, and the troughs, etc., fascinating. Okay, so crude oil is looking horrible. Can I make a low? Well, we'll see how it tests the 44s, and we'll see later on today. Who knows? Maybe the Fed says something that just reverses all these trends. And I'd say that this is the week. I'm watching a lot of things. So let me go on here. So I said I'd go to the IWM. The IWM, which we were 300% long from last week, about a week ago, we took a really nice profits on that big spike to a new high on Friday, kept half the position, and today we got taken out for a really nice gain, an even bigger gain than the first one, and we're out. And now we're looking at this and we're saying, okay, peak D in the IWM, and there's your left side, right side price time match. It took 1 day early, and it broke to a leg D to the upside above 141.82, the 26th of April high. And now it can have a bit of a rest. Peak E, there's that resistance. Remember I spoke about that. Chapman wave inside track repellent zone. So all that I'm saying is, if the Dow really breaks to the upside, goes to the 100 points from here, 21,430s, I'm going to have to just say, today at the close, I'm just going to say that is really good. If the S&P at 2438 spikes at 12 points, 10, 12 points, I'm just going to say, you know what? This is an acceleration phase. I don't want to get in the way of it. I don't want to be shorting too early. But if we turn down today, then it's saying, you know what? All the little ducks are in order. Even the IWM has made that leg D. It's made the leg D in the monthly chart. That's what we're waiting for. And when you get Ds and E's in monthly charts, you just have to be a little bit careful because pullbacks can accelerate quite hard from there. So that's my yellow light says, okay, break to the upside, fantastic. Turn down sharply into Friday's close. You've got to say, hey, be careful. All right. Now we've got to look at, let's look at gold. Gold had a big spike earlier this morning. It's given some of it back. It's still up 10 at 1278. This is a tough one for me. Here's your peak C1, and just mismaking D, so I'm calling this, at least for now, C2. And that's usually just a fraction lower. It can't be much lower, otherwise it's just, there's no C2 at all. C2 is when all the technicals are indicating that there was enough strength to go to a new high, but the price didn't. Okay? I hope that's fairly clear. Now, what's really interesting about this gold is that at the end of the day, when the Fed, that is at the end of the trading day, when the Fed has made its announcement and the market has settled in, and my thinking here is that the Fed is kind of, in a certain way, it's reluctant to raise rates, but it's being boxed in because it said all the criteria that we are looking for have been met. It's how does the market respond? So now let me go through this. The dollar made a new low. Leg D in the weekly chart, also like a price time match. And in the daily, it's gone to a leg D to the downside. The monthly chart has gone to a peak D, and it better hold around here because it needs to get to the 98s within the next 6 weeks without breaking under 95. Because if it goes under 95, the dollar is in serious jeopardy. So now let's look at this EUR-USD. I want to put the package together so that I can talk about what would I be looking for at 245, let's say, EUR-USD. So now you've got the euro-dollar currency pair squeaked to a new high. It went to a leg G/C, and that's now leg D in the weekly. That's what we look for. We got there. The arch formation that goes from a lowercase h to a lowercase m met by going to a lower low, and the rebound from that lower low, if the technicals are strong, which they are, suggests that the euro-dollar currency pair is acting very well. And that if it was to go from the 11.1276 area that it's in now and manages to push into this area right here, so 11.2989, what was the high today? Yeah, so it's almost at what I said would be a target. If a long time ago, what I said is this inverted Chapman wave Roman candle, at any point, if there is a price move for 2 or 3 days within a week in the 1.119 area, the middle of that wick, long wick, there's a good chance it's going to have a rally and test, if not break, this high. And that high was the high of the week of 11th of November at 1.2989. So we were real close to doing that. So that's showing strength. Dollar showing weakness. USD JPY, that is the dollar Japanese yen currency pair, broke to a new low. There's that H pattern I'm talking about. Look how many H patterns. There's one. Here's another one. We're looking at a chance, and I said I think that 108 is the test for the dollar Japanese yen currency pair, and we're at 109.12. I think that's going to happen. So the Fed is going to have to do something, and I'll talk about it right now. The TLT is in leg F, unless it recycles. I'm calling it F for now in the daily. It's in leg B, very strong leg B in the weekly. and a leg B in the monthly. Now, we've been long, and the stop, thank goodness, held. Very tight stop. We were long from 123. It's trading at 126.39. All I can say is that the TLT at the end of the week, not necessarily today, it's Friday at the close. Where will that be? Will it give back all these? Is this a rogue wave? Is this a right arm extension? Is this in the Chapman wave? One of those things where the technicals are very weak, and yet the price didn't see the sign of the beach that said high tide at noon, and at 12:06 the one wave went to a higher high. We'll know later today. I'm going to kind of wrap this up in another minute or two. Not the questions I've got, but what I want to do is to say, what am I looking for at 3 o'clock today? And what are the parameters that are needed to get trend changes? I'll be right back. Dow's up 5.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, just before I go any further, Sanchez Energy Corporation, I was asked yesterday, well, what do I think of it? I said it's starting to act much better, but I want to see how 650s, it was trading at $7 and something. I said, I want to see how the 650s holds. It's at 662, the low today so far, 643. I'll still watch it. So Sunday, don't I just hold off a little longer. It's starting to try to form a base. Let's just give it a little time, okay? And then a couple of, I wanted to see what was it, I hope I can find that because it was so fascinating. There was a trade in the, was it wheat? HW? What hard wheat? Let me just see if I can find it, which looked so different to No, I can't find it. Oh, all right, I'll try to find it in the next break. But so the question was, I was going through the different, for instance, wheat, very nice move up, had a very sharp pullback from peak B, but it's rallying to 451.5. It needs to break above 450? Yeah, 455 and 3/4. That starts leg C. My target would be 462, the 200 period exponential moving average, if it's able to break even just by one fraction above the high of the 8th. That would become my target, okay? Crude oil, C is the corn. No, C is, I didn't hit the right button. So that's A, B, C, so that's E/C. So Citigroup, now let me do this. Citigroup is acting well. It's having a little bit of a pullback today. It's had a terrific move. I'll go through the financials in a moment. I want to finish what I was saying. IWM. So IWM has made that peak D. Now we're going to be looking at it because the MACD is still strong and the stochastic still at 85%. So this is what I wanted to say. Within the context of the markets, a break at the close today on the upside, and let me tell you, the technicals and some of the indexes that have been strong over the last 2-3 days, not the Friday pullback, the ones that have been subsequently strong, are technically still holding very well. It's going to take a lot of price movement to the downside to turn the daily into a sell mode and to even get the weekly to start a sell signal. Okay, so the parameters are IWM at 141.32, down 78 cents. A close below 139, it's at 141.33. So that's 2.5 points-ish. Below says, uh-oh, watch out, consolidation going on. I have to first of all call it a consolidation, and that's how we'll look at it. A break into the 143.80, 144.50 area says, hey, still really good action. So that's the IWM. Let's look at the, okay, now I'm going to go back to the TLT, because the TLT is going to be very important. It's up 1.63% at 126.41. What is it saying? What is it saying about the HGX, which is the housing? Look at the housing sector. Look how it broke out. Remember, yesterday I spoke with Tom. I said, I didn't expect it, but the housing sector, the HGX broke out to the upside. It's got an alternate count now in the weekly chart. I have to consider this is G/C at this particular point. Still very bullish. And the wood, which is the iShares Global Forestry and Timber ETF, where did that disappear to? WOD. Oh, there. Yeah, broke out. So this is also G/C in the weekly, only leg C in the. There is something that's going to happen today at 2:30 to 3:30, 2 o'clock to 3:30. We are going to see that the Fed wants to raise rates. They can raise the rates, but they're going to probably say raise rates now, and then we'll have to see. They're all going to say 3 more rates this year or whatever. They're going to say, raise it now, and then we will wait to see how the data unfolds before we get the next rate hike. If that's the case, the market then says, oh, we know what's going on. And those areas of low interest rate sensitivity, like the home builders, like the housing sector, can benefit, and wood can benefit. The timber and forestry area can benefit. But what does that do to something like a crude oil? Whoops. What does it do to the crude oil? What does it do to gold? It means that the Fed is satisfied that there's some that they're trying to increase inflation, but crude oil is part of that equation. You would expect that there must be a huge glut for there not to be crude oil moving much higher. So the inflationary aspect has to come from, say, gold as a representative, and gold needs to it's at 1278. Gold needs to push into the 1290s. Wow, if it pushes into 1290s, you're going to get your leg D about into 1300s, and you're going to get your leg D this week by Friday, rather than peak C1, C2. But if the dollar suddenly has a bounce and recoups a lot of the loss, by the end of the day, In other words, instead of down at 96.47, down 53, it's trading at 97.30. Something's happened that is very different. I don't want to speculate on a whole bunch of a panoply of events. I'm just going to give numbers. We're out of our one of our long positions, heavy long position, and we'll have to watch it. If the IWM spikes higher, we'll have to consider which is playing catch up and which are going to fail. But a great deal depends on the SMHs really rebounding and becoming leaders. My thinking is they're done with being leaders for now, and you have to be looking at new sectors. So let's just grab the IBB, which is up. It's at 295.98, up $1.55. It looks all of a sudden with the MACD and stochastic as if it wants to go to a leg C. And it's got one peak B minus, and now it's got another peak B, pull back, and it says the IBB, by tomorrow, if IBB is in the 299s or higher, you've got yourself a rotational market that says now we're going back to the biotechs. Let me see where X is, steel, up, down. So the SLX, which was showing strength the other day, not showing strength today. So it's a real bifurcated market. Now, I did say, and a number of questions came in. Let's go right there. This is the bank index, trading at 24.22, down 25 cents. We are long position in the bank in the XLF, but I'm treating it as a position that needs the weight of evidence. And with the rates spiraling down like this, the question has to be, can the financials push much higher? Not just a bounce. Is this just a bounce and it's going to fail, or is this the real thing? And that's what we'll know. Let me make it clear. A push into the 2460s to the 2480s in the XLF is really good action, and it will target the 25.30 high of the 1st of March, or the week of the 1st of March. A pullback that takes it under 23.80 by Friday or Monday says, nah, not ready yet. And the Goldman Sachs has been one of the clues. You see how it got stuck there? It went above the trend line, then it came back. I suspect that eventually this year, when Goldman Sachs when it's on fire, which it is not now, and it's up in the 250s, 270s, it's going to be a leader for the whole financials. I don't think it's there yet. So our position is a shorter term one. It'll become more intermediate term if the XLF really does have a push. Basil Chapman, target conditions are with.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
So hard red spring wheat continuous contract spirals to a leg E. Just 2 months ago it was at the 544 area. It's now 637. Unbelievable move. Leg E. MACD is good. Stochastics hinting that it's a little technically overbought, and it hit the 200 period exponential moving average in the weekly chart. Bam, right there, and stopped dead at that level. And monthly chart has improved a lot. Wow. So that's not wheat. That is hard red spring wheat. At MW is the way I'm looking at it. Whoa, congratulations, Z in the den. Had this nailed. Very nice. Okay, so this is what I want you to look at. What's the time? Yep, time's good. I just want to run this quickly. Every once in a while I have this serendipitous thing. I either hit the wrong key and I get to a stock that I just completely forgot about or didn't know about, whatever. But one of the things that I do at moments of lows and highs that I like to look at is I just grab the alphabet and I run them like this. On the left is the daily, in the middle is the weekly, on the right is the monthly. Here we go. A, Agilent, 59.64, up 36. This is one of the great companies. Agilent Technologies, spectroscopy solutions, improved method developments, etc. Leg C and the upside in the monthly, fabulous chart. But a potential peak F, if there's a sharper pullback now in the weekly, it's the daily that made a peak E at 61.02 on the 2nd of June, and it's starting to make lower lows and lower highs. B, Barnes Group, made a peak D doji just 5 days ago, pulling back. It's in a weekly, probably a peak E and a leg F in the monthly. Barnes Group, Aerospace and Industrial Manufacturing. Watch it, be careful. ABC. C is Citigroup. Now I can get to the Citigroup. I'm not sure. A, B, I'm calling this an E/C alternate count. My I says it's probably an E. If there's a pullback from the 63.71 level it's at right now to under 62 in the next 2-3 days, that's a problem. The weekly chart has got an A, B, C. It's in a D right. Yep, a D right now. So, and an E in the monthly. So it's getting a little extended shorter term. The high that was made on the 12th of June, if it takes it out at 65.50, that's going to be very positive. So those are the parameters, A, B, C, D. D is Dominion Resources, made a peak E 3 weeks ago, right there on the 2nd, 2 weeks ago on the 2nd of June, 81.65. It's probably a peak E weekly, and it's a leg E, power and energy, electric. Got to watch this closely. E, isn't it? E? Yep, there's an E. Any SPA, ADS, it's trading at 31.27, made a major spike to the upside, inverted candle, 19th of May, 34.62. Peak E, left side, right side price time match. Weekly peak D, and the monthly doesn't look too great. No problem. EF, F is forward. Lousy action down at 11.11 today. 11.11. down 16 cents. Doesn't look very good. I'm very worried about Ford. I'm very worried about General Motors. Very worried about the guy down the road told me that the Jeep dealership, Chrysler Jeep dealership, he said a year or so ago we were selling 40 cars, and then he said something I couldn't quite make out what he said. He says now we're doing 100. We sell 40. Now we're doing 180. And I don't know if he said a month, a year. I don't know what he said. But all I'm saying to myself, because I just heard 40 and 180. I thought, 40 and 180? That's incredible. And yet, look at the stock. It's a stock, Ford, Chrysler Autos. And it's one of the better ones. It's up at the highs, not in the lows. This is a big deal. Let's go to G. So G is a really good-looking chart. This is Gem-Pack, makes an all-time high of 28.52. And then the other day, it pulls back very sharply to the 23s, runs back up to 27.82 on the 2nd of June, and now it's consolidating, still having a high-level consolidation. So that's one that's not bad. ABCG. H. Hyatt Hotels Corporation made a peak E back in May, and it's making lower lows and lower highs. Peak D in the weekly. Leg E could be a peak E in the monthly. I'm watching this real closely because Marriott, I'm just digressing for a moment, is a fantastic looking chart, but it's digesting. And that's saying maybe we're looking at a little slowdown in the summer for the hotel group. All right, so let's go A, B, C, D, F, G, H, I. I don't think there's an I. Yep, there is an I. Intelsat SA, just a lousy looking chart. HIJ. Is there J? No J. HIJK. K is Kellogg. Kellogg is in leg D, very strong leg D in the daily, but the weekly is in a leg D, way under. It's come off the low from the 200-period moving average. I just wanted to go through these. I could go through the alphabet like I've done before. I just wanted to say, remember, I went through the IB Top 50. I went through the IBD Big Cap 20. I've been through the Dow stocks, and now I'm going through just arbitrarily the alphabet, which is what I like to do every once in a while. Q is another fantastic stock that's holding near the highs. This is Quintiles Transitional Holdings. But it has made a peak E in the daily and a leg D, a peak D in the weekly. All of them. I think we've got to be careful here. If the breakout occurs, then we go into an acceleration phase into the upside. I don't want an acceleration phase here. I want a consolidation. I want the next breather so that we can build energy before you hit the turbocharger. So, yeah, Fiat owns Jeep. Fiat Chrysler is all one company now. Fiat bought Chrysler. And funnily enough, the Jeeps are just selling like I just told you, 40 to 180. I mean, they are selling everywhere I look around, the Jeeps. So it's an amazing thing. And a Consumer Report gives them a lousy write-up, but people love them. Okay, so now let me do this. I'm going to go to the next step, which is, I'm not going to go through them all other than Zillow to show you the Zillow's at highs, and it's part of the online real estate purveyor of news and everything to do with real estate. Doji candle in leg D right now, leg E in the weekly chart, but at highs. So yeah, it's not a mixed picture. It's a picture that says there's vulnerability here if the market decides to take a turn for the worst by the end of the day going into Friday's close. That's all. Be careful. Now, let me do this. Within the context of the volatility index, I would not put the volatility index out of the equation. I believe that the VIX index at 10.75 up 33 cents will be the purveyor of good or bad news. And if by tomorrow the VIX index is trading in the 1150s or higher, with the Dow under 21,250, the S&P under 24, let's call it 24.25, the IWM pulls back sharply. If we get that pullback, then you're going to see this VIX start to climb. And then you've got to be careful because the SMH has become very vulnerable. All of a sudden, profit-taking money is going to come out of these guys. So that's what I'm looking at. And if, on the other hand, there's an interpretation by the market that what the Fed says or does or doesn't do or whatever it is, the interpretation, remember, it's not the market action, it's the market reaction. I couldn't care about action, I want the reaction. How does the market react to the news? And then you get the action. It doesn't work the other way around. What I'm looking at is if there's a powerful move to the upside, and then you should get powerful moves at dollar and gold and all these things. If they just stay sort of stagnant, they're out the picture, it's going to tell us another story that we'll have to deal with tomorrow. But in the meantime, what I'm looking at is there is a degree of vulnerability here that I don't want to dismiss. And that's kind of important for my work. I'll be back. Basil Chapman, Titan News, Dow's up 9. This is down 2. Good luck.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, so I just got an email from Jamer. Thank you. It says, hi, Basil. Car dealers track their sales month to month. Every month they start over. If it was a larger dealership, 180 is very possible for a monthly number of units sold. Very good, actually. Have a great day. Yes, I'm impressed. I have to tell you, they're just flying off the lot. I know. I go by and I just see different colors, and that's the only way I can tell is that the colors change. Mostly white, I guess, but no, they do change. So that's very interesting. And if that's just a northeast thing, that's one thing. If it was throughout the country, then I think Fiat Chrysler would be. It's gone from the 6s to the 10s, hit the 11s just fairly recently. Actually, recently hit 11 today, 11:03. But it's sort of stuck in the range. So that's the one that I keep looking at. I'm saying, do I want to buy? Do I have subscribers buy this? and then it just pulls back. It's just stuck in a range. And I think when it comes out of the range, it's going to be very positive. So anyway, I'll keep my eye on it. Now, let's just do this. Bonds. Bonds are up almost $2 at 156. This breakout, the way I notated, I really don't have much choice. I'm calling it an F. And the daily is extended leg B. That's the same as the TLT. But what's going to be really interesting is if I go to this chart right here, if I can get it, there it is. You see the way we're making lower lows and lower highs? We're right at the support level of my triple yield chart, the 30, the 10, and the 5-year yields. And all of them are right there. In fact, the 10-year is just nicking the downside support. So I'm looking at this and I'm saying to myself, the bond market is telling us that one of the Fed criteria is being over-anticipated. And in fact, if the bonds yields are very weak, it's kind of telling us about a weak economic report somewhere. So there are mixed signals all over the show. All I know is that I won't be able to do it today because I never expected the big pop-up in the TLT, but I hope we can raise the stop on our TLT long, that's the Lehman 20-year T-bond for my subscribers, because anything can happen between now and the end of the day, right? So watch the yields, because at the yields, this is down 84 cents at 27.79, 2.779 for the 30-year, and the 2.113 for the 10-year. If there's a reversal, sharp reversal by the end of the day, that could shake up the market. So when I'm looking at this, I'm saying, I have to give upside potential and I have to give downside potential. In my Chapman, well, we won't have time for it now. In my Chapman Wave 120-minute chart, there's a chance that we're in Chapman Wave 5 again in the 120 minutes on the upside. So all I can say, and look at this, the trend just gave a signal. It's at 2.04. It suggests that within 2 days, we should get a very sharp 11-point rally in the S&P. Does it come from lower down or just does it take off? Oh, what mixed signals. I'm just saying to you, keep your stops in place. Let the market play out. There is vulnerability here for the sectors that were the best, but we have so many mixed signals that all I can say is strap your belts, get your seat belts tightened. We're going to have a lot of fun when the final say is made between 2 and 3 o'clock this afternoon. We'll be back tomorrow, and I think we're about to wrap up. Yep, we're about to wrap up. Watch it. Dow up 100 points, very positive. Dow down 100 points. Says we could be starting a consolidation that now impacts the Dow and the S&P because the Qs and the SMHs and the XLK have already started their digestive phase. Wow, that was a lot of work. Have a great day, and for subscribers, I will be updating at 2:30. See you tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.